And we are live. Monad in the morning. Happy Thursday. Couple elephants in the room or not in the room. First and foremost, new location today. We've got intern in an underground bunker on his birthday, no less. Myself calling in remotely, a little bit under the weather this week. Didn't want to get the teammates or the guests sick, but Monad in the morning must go on. It is Throughput Thursday after all. Where else would we be, intern? How we feeling?
I feel pretty good. Not my intention for every single person watching this to know that it was my birthday, but alas, we find ourselves in this position. Cat's out of the bag, Daniel. I don't think there is any day. So, fun fact: I was actually born on Throughput Thursday. Some puns or jokes you could make about that, I'm sure. And today is Thursday, and it's the best day of the week. So, no better way to spend a Thursday morning than talking to Danny and Jessup on Monad in the morning.
Bingo, as well as several esteemed guests joining us. First, in about 5 minutes, we'll have Tom Dunleavy from Varus Capital, followed by Austin Federa at 00, now formerly head of comms, head of growth at Solana. So action-packed lineup for you today. Be sure to stick around. And if you're joining us in the first moments of Monad in the morning, thank you for being here. Don't forget, drop a comment on the stream, subscribe on Twitch, send it to your friends, family, loved ones, strangers. Get them in here because it's Throughput Thursday and we're going to have some fun for sure. Been a pretty exciting week, intern. You've been making the PR rounds. It seems like you've been on every live stream in crypto this week. You were on the roll up. You were on Thread Guy. Are you warmed up for Throughput Thursday? Monad in the morning.
Yeah, you know what they say. Do you always got to save the best for last? I would say production quality on the roll up was pretty good. Thread Guy's production quality also pretty good. Little less formal. Production quality on the pipeline, like undisputably the best in crypto. Even when remote, which is very surprising. Very surprising that they just one up themselves. They being Jessup and Daniel when remote, but yeah, very very excited. I think that this is the number one show in crypto. I think the All In podcast just started saying that, and then they just like decided that they could just say that, and then went with it. So I'm cool to start pushing that for the pipeline.
You know it.
Like
You know
the
what we should
number
do?
one show in crypto.
Well, since they've already kind of staked, as it seems, they've staked their claim on the number one show in crypto, we could be the number one crypto show in the world. Big fish, big pond, not small fish, or not big fish, small pond.
What about? Yeah, I'd say like we can either go the number one live show in crypto or the best crypto show in the world. I kind of like best crypto show or the number one crypto show in the world. Yeah.
Undisputable.
What do you think, chat?
Undisputable. Impossible to dispute because yeah, what are you going to say?
I mean, the chat's going to be with us for sure. They're here. They're early. It's Monad in the morning, pre-mainnet Monad in the morning, no less. We're just getting started, but this is a little hard to believe. We're 28 episodes in now. I think we've been consistent every single week, except we might have missed 1 week in there. So that's pretty good. I'll take that.
It's not due to lack of effort.
It is not due to lack of effort. That is for sure. I know we've got Tom calling in just a minute or two here, but also exciting week in the Monad sphere. Wave 2 Monad cards hit the timeline. A lot of happy claimers out there. Any reactions or thoughts to that? I think, after Wave 1, it's kind of straightforward. It's like we know this is going to make a bit of a splash. Probably not as much as Wave One coming out of nowhere, but definitely a fun week.
Yeah, I think very hard to predict this. Um, Actually, just kidding. It was not hard to predict whatsoever. But Wave One went live, and everyone's like, "Oh, I want a Monarch card," and you tell everyone like, "Yeah, just go get a nomination. Just ask one of your friends that has the Monarch card. They'll nominate you. You'll get it Wave Two. Very straightforward. So easy a caveman could do it." And then Wave Two goes live, and I got a ton of messages going, "Wait, how do I get the Wave Two on?" You're like, "Okay, well, you just doxed where you fall on the IQ bell curve meme. Congratulations. You do not get a Wave 2 card." But I think a lot of people are very excited. The Wave 2 cards actually had this very specific look that I like. Shout out the design team, Austin and Kev on our side. Um, I think they look awesome. I think Toon's cooked, which is great. Sometimes he cooks and it comes out, the steak is kind of overdone, potatoes are soggy. But on this one, it was 5 stars. I would leave a Yelp review if I could. So I think shout out Tunes, fantastic job.
Shout out Tunes. He's definitely going to be pushing some more ideas down the pipeline. No pun intended. And definitely look forward to those. Hopefully the steak comes out that nice, perfect medium rare with some consistency going forward here.
Yeah. What else? What else do we have this week? A lot of things have happened. Um, or I know we're actually supposed to bring Tom on. We had the Gainsey stuff happen yesterday. That was a very memeable moment. Um, Prices are not really moving outside of Pokemon cards. So if you are the nerdiest of all crypto enthusiasts, then you are having a great week because your Pokemon portfolio is skyrocketing. Um, hmm. I don't know what else. What else we have?
Yeah, it's kind of
Well, we
it's one of
got
those
Tom
chop
is here,
weeks.
so
All right, let's bring on Tom Dunleavy. Without further ado, pump to chat.
What's
Tom,
up, guys?
how's it
How's it
going?
going?
Good morning. Welcome to Monad in the Morning. It's great to have you.
Thanks for having me. Excited you guys are talking about sports cards, or actually Pokemon cards, but I'm a collector of both. You can see some of them back there.
Oh wow, that
Excited.
looks. We got like half in the camera view, but that looks like a pretty serious collection back there.
Yeah, we got a few Brady's, a few Mahomes, mostly football cards, but I gotta. My son try. He doesn't fleece kids on purpose on the playground, but I try to tell him like what's good. He came home the other day with like a $300 card, and I was like, oh man, I'm gonna have to call someone's parents like, get this back. But yeah, Pokemon's coming back. Sports cards are back. Bull market vibes.
So usually cards, they kind of fall into two categories. There's kind of like trading cards and then sports cards. And usually with sports cards, you hear baseball. I don't know why. For some reason, baseball cards are just the ones that people tend to gravitate towards. What drew you to football? As NFL is my favorite sports league for what it's worth. So I would love football cards, but just it's not a very common thing that we hear. What was the impetus on the football side?
Yeah. Stop me if I go too far in this one because it's a pretty interesting topic. So like there was this huge era in like 70s sports cards started coming back, and then into the 80s there was a few companies that had the licenses across all the different sports, and they overprinted them like crazy. And most of that was in baseball because that was like the original sports cards, like your Mickey Mantles, like your Babe Ruths. And NFL cards were out there starting in the 70s or 80s, but they weren't as widely collected, and NFL frankly wasn't as popular as it is today. So like from the 90s on, you saw these other leagues that got super popular. So not only NFL, but NBA sports cards started to rise in value. So the most expensive sport card until last week was actually a Patrick Mahomes rookie card, graded really highly. And then there was one that sold last week. It was a dual auto, I think LeBron and Kobe. So Kobe is obviously not signing any more sports cards. So like NBA and NFL have actually kind of like overtaken MLB in a sense. And then MLB is still like somewhat popular for like the super early stuff, but it's a big rabbit hole. There's so many companies that print different things. Like there's like these very specific like variations in terms of like what's valuable and not. Like just getting like someone's rookie card isn't like super valuable anymore unless it's like numbered and like auto, or there's like a few different ways to do it, or like from a particular set. So it's a whole rabbit hole, but it's fun. It's very like it's a big overlap between crypto and there's a lot of similarities in terms of like scarcity and trying to find like either players or trends before others. So it's just another investment angle.
Yeah, I was going to ask, like being in the sports card space, and then also believe you come from a TradFi background. I was kind of curious as you were running through that if there was any, kind of like the background in collecting sports cards and memorabilia like influence your, transition over to crypto at all, or just kind of separate.
It's funny. I was just looking at my Top Shot and NFL All Day account, and I think they're older than my MetaMask wallets. So it was actually first, and then I stopped for a bit, and then got into like physical sports card collecting. So like full circle. But it's just another investment. So there are like different ways you could play sports cards. So you could just basically be like a gambler and go like open a bunch of packs and like do these random lotteries that you have on Courtyard and Arena Club and whatever, and you're basically just like trying to hit the nuts randomly. I put 500 bucks in the slot machine. Hopefully a nice, rare card comes out. And that's actually, so you guys were talking about cards. I think it was Collector Crypt that's gotten a lot of shine recently, which we were actually investors in my last fund, funny enough. They're awesome, but they have like their big thing is this like vending machine that you put in 50 bucks or 250 bucks, depending on your price point. And you get back a rare Pokemon card or, some variation. And then you can sell it back to the protocol if you don't like it, and you could do it again. So that's like the gambling aspect of it. If you're, let's call it like more like thinking like a collector or investor, you're buying like the blue chips. So you're buying like whatever, like a highly graded Brady or an old school like Charizard or whatever Pikachu. And you're like saying over time, there's a natural deflation in these things as older cards like just, go by the wayside or deteriorate or whatever. And people will still find these things valuable in the future as some sentimental collectible or on the sports side because, they have some affinity for the athlete or whatever it is. So if you think about it from like a investment perspective, you can over the long term, find some profit, but you need to have like specific player takes or directional takes on where the sets are going or things like that. So it is fun in that regard for sure, but it's definitely like totally discretionary on where people's income is at the time. So you saw in 2021, there was a huge spike in sports cards and Pokemon cards and watches and cars and, everything. So we're sort of seeing that again. Now will it be more sustainable this time? It's tough to say.
Yeah, I think there's definitely a strong parallel between like just trading NFTs in general and the way you just outlined that people kind of approach the sports card space. Like you could be the intern type of collector where you're buying a CryptoPunk and you're sitting on that until you can trade it for a house, or maybe you're like just participating in a bunch of new mints. Probably same holds true for meme coins, trying to get that like crazy upside basically out of luck. But yeah, that's always been interesting to me, and also interesting. Well, Top Shot really hasn't made a comeback. Is it football.fun? What's the football app that everyone's trading? Global football, not American.
Yeah, football.fun. I'm not in those streets because there was what was it, So Rare, and then there was another instantiation before that was very similar. So I saw that come out and I'm like, oh man, we're running this back. And I was pretty big on Top Shot and All Day before, and I just got burned. So hopefully Collector Crypt's kind of taking up the mantle there, and there'll be some success. But we've had so many false starts with these things, even though the use case is so clear. I'm just burned, so I haven't dove in pretty deep with that one. But I think they've sold off a ton, right, since the initial pop.
Yeah, that tends to be how it goes. But also curious more broadly as someone who sees a lot of different startups and a lot of different verticals as well within the crypto space. Like, what has you particularly excited in crypto right now?
Yeah, it's an interesting time in crypto because you have a lot of the funds that were investing or that raised capital in like 2020 to 2021 effectively have all their capital deployed. And those funds were quote unquote bull market funds, a lot of them. So they're raised from like friends and family, high net worth individuals. And the quality of investments, frankly, for most of them are pretty poor. So now that those guys have deployed all their capital, the projects they're investing in that have been more speculative, let's call it, are not getting funded anymore. So overall, like for the whole environment, that's good. That does mean though that the folks who raise those mega funds, like the really, really strong investors, do have a lot of capital to deploy. And frankly, there aren't enough companies in like the Series A, Series B stage that they're able to deploy into. So they're starting to play down on like the pre-seed and seed. And those guys are looking for really tangible metrics and tangible use cases above speculation. And we're doing the same thing at Varies. So for me, the things that I'm excited about are the things that probably wouldn't surprise you a lot. So RWAs is one of them. We invested in Collector Crypto, my last fund, looking for new RWA opportunities outside of treasuries and stablecoins, which seem to be the areas that most like to play. And it's really about the interconnectivity for a lot of those things that interlink the banking system and crypto rails and provide more efficient means of transfer for capital. So a lot of things in payments that enable not only sort of treasuries and stable coins to move. And then more broadly in RWAs, I mean, we've talked about things like real estate and tokenization of other alternatives for a long time. But, our fund has a big presence in the Middle East, and we're seeing a ton of interest in unlocking opportunities in that region. For example, if you're someone in Dubai and you have a bunch of apartment buildings or office buildings or whatever, there's no really easy way for capital from the US or New York or wherever to invest in the region efficiently if they want access to real estate or land or whatever it is. So crypto is starting to unlock opportunities there, but it's still, and this may sound silly, but it's still sort of early days in trying to get a lot of those folks up to speed on the RWA side. So yeah, stable coins, treasury is super interesting, and things against that people are investing in. But the next level of RWAs, I think, is finally coming. And now the biggest problem is, in our view, is that there aren't really the rails to support that. So if you want to tokenize $1 billion in real estate, or the Maldives announced earlier this year they're going to try to tokenize $5 billion worth of their islands and infrastructure. Like there are no chains or platforms or L1s or whatever that have done $5 billion worth of tokenized real estate. The biggest ones right now are effectively like the BlackRock products that are just doing tokenized treasuries. So like it's still early days in RWA. So there's a lot of opportunity there, which we're really excited about.
I'm curious on the Maldives. Do you have any more information on that? Is this just like an announcement of the intention to bring this on, or like, because there's kind of two things that we've seen so far with large RWA, and I don't mean to put you on the spot and like pick on one thread, but that just grabbed my attention. Like Galaxy put like their legitimate stock is on Solana. But in the past, like with the Robinhood announcement, we saw SpaceX and OpenAI stock trade, but like it was really just an IOU for the actual stock. So like, yeah, if there's any information about what this Maldives stuff actually looks like, that is very interesting. I had not heard that before.
I don't know if I can share. I can't share my screen, can I? Anyway, so viewers can look it up. It's May 9th. A bunch of media outlets put out a report. So it's $9 billion. They want to effectively tokenize the entire island's set of real estate and effectively build a new crypto hub in the region, sort of like what UAE and Dubai has done. Now, details are sort of scant on this, but that's one particular project that at the announcement attracted a lot of attention just because the amount of capital that was announced. Now, you've had a number of other projects that have announced similar things and have not gone through. My sense, and from talking with folks in the region, things like this are much more real because the capital in the region is looking for new outlets and are finally seeing more clarity in markets that are going to potentially put capital in up and above the Middle East. So, like, because there's more clarity in the US, because there's more clarity in the EU, these guys can effectively hold tokens and route capital into avenues like the Middle East, and a lot of the projects. So, this particular one, TBD, but more broadly, there's a lot of interest here.
What I'm curious, like, what are the main, should be like kind of like basic level question, explain it like I'm five kind of deal, but what are the main advantages of doing something like that? Like, why put $5 billion of real estate on chain?
Yeah, the main advantage is access to capital from regions who previously wouldn't be able to allocate to a project like this or a region like this at all. It's liquidity into these markets, it's new sources of funding, it's diverse exposure for the end counterparties, like whoever it is, pensions, sovereigns, endowments, other nations who want exposure to a new asset class and one that's much faster growing, right? If you can invest in, like, how else would you invest in an area like the Maldives or even if you were investing in UAE or Dubai 20 years ago, you could have said, hey, I think the government's really going to put a lot of resources in the region. It's going to turn this into a tech hub. And you might have been completely right, but you would have had zero ways to invest in it, maybe except going to buy an apartment yourself there and having very concentrated risk exposure. So with something like tokenization, you could diversify your risk exposure across a number of apartment buildings, land, even different countries that are tokenizing assets, and provide yourself a more diverse portfolio with less downside while still being able to provide capital to an investment opportunity you find attractive.
I think there's also, and maybe correct me if I'm wrong here, but I could imagine something similar to the DAT stuff that have seen basically take the market by storm, where yes, you get new access to capital. There's potentially tax advantages for countries where crypto is taxed heavily and equities are not, right? Buying a DAT could actually be a better way to get exposure to the underlying asset. But a lot of the people issuing them are actually just going, okay, well, if I have $100 million of assets and this is actually going to make a trade at 200 million, right? You get a premium just for the fact that there's exposure. And so I would imagine that a lot of what, like the Maldives deal, for example, what they're looking to do is like, yeah, we're going to put 5 billion or 9 billion, whatever, real estate on chain. Hopefully it trades at 15, right? Like you just get a premium just for the fact that it's on chain. That's what I would guess, but I'm very curious to hear if you think that's also could be motivation, Tom.
I would say yes. And the reason that is because there isn't the ability to find a true market price for a lot of these assets because there's no publicly traded market. And, if you go to buy a little piece of land on a little island that doesn't have further growth prospects or opportunity, that's going to have a much lower ticket price than an entire island that is suddenly attracting billions in capital, that's flooding in through this opportunity and others. So there would certainly be a new premium for that versus others who are not tokenizing if they're able to tell the market that they're confidently able to execute on that plan. So a lot of sort of leaps of faith there, but that would certainly be part of the intention.
Mm-hmm.
This might be the most left curve statement of all time, but it reminds me of the show Silicon Valley when Peter Gregory is just talking about cicadas for like 2 episodes straight, and then you learn that he's like betting on like sesame seed futures, like just going way up because the cicadas are going to come out and decimate the supply, and just like ability to invest in these rare markets is like, or just like very like disconnected kind of random markets is is kind of abstract for a lot of people, but to unlock the ability to participate is really interesting when you think about like the longer term dynamics that might result from that.
Yeah, I mean, if we think about what crypto enables at its core, it's reduce friction, ability for capital to flow where there are the best opportunities, and improved equality and investment opportunities, which right now capital is effectively flowing to the Western world, which is what, 30-40% of the global population. I mean, there are opportunities in Africa, South America, Asia that are just so niche, only available to local individuals if they're available at all. And this is how we start to unpack that. So it's going to be baby steps into tokenization, and these big splashy announcements about $1 billion deals are great. But my broader point is, I think we're certainly going to get there, but the rails and intermediaries are still being built, which is where there are investment opportunities today. Despite the fact that everyone is very excited about stablecoins and treasuries and other RWAs that have made a lot of progress and received a lot of capital.
Yeah. Sure.
Are there any other areas of the market that that you're kind of actively looking at or considering?
Yeah. So the areas we're most interested, so back to my earlier point about different allocation methods, we're seeing a lot of like the quote unquote like crappy projects be flushed out, which is good because they're more true, interesting investment opportunities that are utilizing blockchain. So another area that we're looking at is how to get private market data online, and that's data that's living in, for example, so Walmart does, or even a private grocery store or private retailer would do thousands, millions of transaction volume a day. They track that internally. But if you were an investor, or if Walmart themselves wanted to better aggregate and understand that data or sell it to counterparties, blockchain is a great tool for that. They also have the ability to anonymize that data and then monetize it effectively. So there are a lot of interesting data sets like that that hedge funds have historically tried to track down and pay for. Um, there's a lot of opportunity in private or obfuscated data sets like that that are coming online. So that's another area we're looking at, is private market data. Areas that, and my general philosophy with this stuff is you have to be pretty flexible on what's going to emerge in terms of blockchain, because that's not an area that I would have said previously. Actively interested in DeFi again. I think that's been driven by regulation. Asked me 12 months ago if I was interested in DeFi, I would have said absolutely not, because it's very hard to build a moat in DeFi, and it's basically betting on a lot of network effects. But now that we have more direction on how we're able to provide sort of value back to token holders and users through real revenue, DeFi is exciting again, absolutely. So that's another area we're looking a lot at. Particularly sort of the downstream effects of these digital asset treasuries that are providing DeFi, right? If you're investing a digital asset treasury in Ethereum or Solana or even other ecosystems, the next step and the real differentiation point from ETFs is, well, I'm going to use that actively in DeFi. So all of these protocols that may have struggled with gaining TVL or user adoption in the past have a new source of funding and new lifeblood to actually make their case if they can see and get product market fit. And it also enables new and interesting primitives that could get funding as well. So DeFi is another area we're actively considering.
Yeah, it's funny when they get rid of these ridiculous restrictions on allowing DeFi to operate in a way that like makes fundamental sense to everyone who looks at the sector, that all of a sudden it's actually a pretty solid space for investment again. You don't have to have like ridiculous tokens that have no meaning and you just slap governance on it. Yeah, that's great to hear.
Exactly. Yeah. And it's a weird place to be in terms of being an investor, in that you have to be very closely tied to what government's doing and where things are moving directionally, because it immediately changes the investment landscape. So for example, prediction markets, in my view, were not a fantastic investment the past few years. I mean, folks like to point to some of the political upswing of volumes and user activity, and that's come down pretty strongly post-election. And then you had this next hype cycle, which was sports betting on chain for a lot of these guys, so Kalshi and Polymarket. In long term, the interest there is actually going to be driven by the recent very small subtext in the big beautiful bill that came out from the Trump administration, which led to sports bettors not being able to write off a pretty substantial portion of their losses. So now these guys are actively incentivized to move to something like a Kalshi or a Polymarket if they're offering the same level of odds and have the same level of liquidity, because they can now write off their losses. They're effectively investing in commodities. They might have better liquidity, and guess what? They might not get limited to. So kind of all that stuff, if you weren't paying attention to like the government landscape, you would have never seen that investment opportunity. And that filters back to the RWA stuff, that filters back to the broader upswing we've seen this cycle with the Trump election, the crypto president, right? So the game right now is very politically influenced, and you have to be really tight in terms of where these things are going, unfortunately, which is like the exact opposite of ethos of crypto, right? We should just be building things for, the tech and for, broader decentralization and distribution. But unfortunately, it comes down to the direction we're getting from the government in some cases.
So I have a question on the sports betting side, just because this like directly impacted me. I was doing my taxes 2 years ago, and I'm in this fantasy football league, which is like, you have to put up a lot of money to be in it. And I'm talking to my tax guy, and he's like,
no big deal.
Now he's like, you can't write off. A lot of money, like relative for me, right? It's like, it's not like a $20 league. But I lost, and I'm like, oh, can I, use the loss to offset some of the gains? And he's like, no, you can't use your fantasy football losses. And I'm like, okay, sure, makes sense. The next year I won, last year, big win. And I'm like, so do I have to pay tax on this? He's like, of course. I'm like, how is this a thing? Like, how? I don't understand. I mean, I get it because, if you could just have losses, then you can just like get the loophole. But that seems crazy that is like the letter of the law for that.
Another rabbit hole. I wasn't expecting us to go down, but these are classified as games of skill. So daily fantasy sports actually sits separate from sports betting, which is why some states allow it when they don't allow sports betting. And in those states, you cannot write off your losses against your gains there, because it is not regulated activity like sports betting is. So the sports betting angle was that previously, if you were just betting like sides and totals, you can write off 100% of your losses against your gains, but now you can only write off 90%. And you can see the asymmetry in terms of the math if you just do a shit ton of volume. If you do $1 million of volume on both sides and say you're even, so $1 million in win, $1 million in losses, but now you can only write off 900K, and you're on the hook for $100K in taxes, even though you broke even for the year. It's like, you can see why these guys are looking at Kalshi and Polymarket and saying this is a much more efficient way to do it.
Mm-hmm. Yeah, I mean, I would. It seems like regulatory arbitrage still has product market fit. It seems like it actually has the most product market fit of anything in crypto, and has since Silk Road came out.
Yeah, I would recommend you take your wins in fantasy football and stablecoins, or otherwise.
Well, I mean, speaking of wagers and betting, Tom, you put up a pretty big public wager earlier this year against Kyle Samani, I believe. I believe the wager was, you are saying that ETH will definitely hit 10K by end of 2026 at 3-1 odds. Is that correct?
Yeah, if I was smarter, I just would. Well, actually, this sucks as a U.S. resident, another regulatory arbitrage. But if I wanted to put an options market position on, I really couldn't even do it because I can't access Deribit and OKX and whatever else to actually put on a direct wager, which I think the odds at the time would have been more like probably 15 to 20 to 1 or something like that versus 3-1. So, first and foremost, I think the ETH in general has just been undervalued for so long that it was just an asymmetric bet. One that if crypto wins, that ETH is going to win, and you could argue that maybe ETH won't 10x from here. I don't have lofty price targets like Tom Lee and others, 80,000 ETH, which I don't even know how that works in terms of like market cap. But in terms of like if this space is going to continue to grow and be a meaningful part of the global economy in some meaningful percentage, if this is going to be a 1 to 5% position in everyone's portfolio for the next 10, 20, 15 years going forward, Ethereum is going to be a large part of that, and that's still where a majority of the activity occurs today, and has occurred for the last 10 years outside of some blips. So for me, it was a pretty straightforward bet, and the second part was people need to take Kyle up on some of his bets because he's offering these ridiculous sizes on the most ridiculous wagers, and no one seems to want to take him up. So I'm happy to. I think that was. And I looked pretty smart when ETH almost hit 5K within a few months of that bet, but we still got plenty of time.
Yeah, I was gonna say it's been basically up only since then. It's gotta have you feeling decently at least. Almost hit the halfway point.
Yeah, exactly. So and my mental model for this, right, is we're very early innings for the bull market still. Everyone loves to try to call the top and like seem like they're the next smart guy, but we've effectively traded sideways in crypto for the last few years outside of the FTX and other collapses we've seen. But the other reason is like there's no net new capital into the space, and these DATs and TradFi coming online through RWAs and having interest in crypto venture again. You've seen this from like the big funds that are allocating now to these protocols and primitives directly versus going through other funds. That means net new capital into crypto from TradFi, which is still 100 times bigger than we are. I mean, we've been PvP trading for 2 or 3 years. So it doesn't take that much money to move the needle from these bigger institutions and bigger pools of capital. And finally unlocking that is key. And I think folks would be, especially folks outside the US, would be pretty surprised to realize that even within the US, if you have like a Merrill Lynch, which is Bank of America, or Vanguard, you still don't have access to the Bitcoin, Ethereum ETFs. You still don't really have access in your 401k unless you're doing a separate sleeve in your 401k. You still don't have access in target date funds where the majority of Americans actually route all their retirement savings. Like all these other vehicles that we think like, oh, the ETFs are approved, like American Capital's all like coming in already. It's like, no, this stuff's like just getting started still, and it's going to have a very long tail to it. So I think directionally just betting on the asset class going up is an easy one. That's why we're all here. But if you're going to do it, you're going to take the biggest assets that have the biggest exposure today. And that's Bitcoin, and that's Ethereum. And honestly, I'm bullish Solana too, which I told Kyle as well. But, I think his price target there is probably still higher than mine.
Do 2 questions. One, you said early innings. Do we have an inning? Do we know if it's top of the third? Anything there? It can be maybe a range would be okay too. And then 2, have you ever actually talked to Tom Lee before? Because it would be pretty I don't know. It would be pretty dead on with the fact that the bet happened and then Tom Lee came out and did this, but just asking.
I have not talked to Tom Lee directly. We have been in conversations with a lot of different digital asset treasury companies, investment banks, and others who are putting money to work here. So, I mean, more broadly, I knew the trend was coming, but did not talk to Tom Lee directly. That would be, he seems to have a pretty good pulse on where the bottom of these local ETH markets are. Master trader Tom Lee. So I don't know. I wish I did, but I don't, unfortunately. And then, sorry, what was the other question? Oh, what inning are we in?
Inning, yeah.
Yeah. So for our non-US folks, I would say we're not even at halftime of the match, maybe like minute 20 or 30 or something like that. I think the entire Trump presidency is going to be a bull market unless you see regulation that is going to stop him in his tracks. So that's, in the US, there's the midterm elections that we get upcoming in about a year, and that could flip Democrats and Republicans. But if we still have Republican influence, Republican majority, I think you're going to see a huge amount of capital and favorable regulations still coming into crypto. Um, if not, I mean, there are a number of reasons why. I mean, I think the most obvious one is still the ability for stablecoins to solve a lot of our debt problems. And once you start putting regulation that helps that scaffolding, it's only going to filter out into market structure and the other things we've been talking about for a long time. And that'll provide a lot of the clarity for capital formation, which has been absent. So, my base case is we're not no more 4-year cycles. Like, this is going to be a bull market as long as we're able to get favorable regulation and not be stampeded by governments. So, biggest capital base is still in the U.S., and that's what's driving a lot of this. So, my idea is that we're still going to be in a bull market till the end of Trump's presidency.
Love that prediction. I tend to agree. The only thing I see that could also impact it was, like, say the presidency was coming to an end, and then people were worried about doing things that then might be hurt by the next administration. And so it actually would end before the presidency. Do you see that as a potential risk?
So we have this, like, what I'll call, like, crypto Twitter, like, leveling game that everyone tries to be like the smartest person and front run everybody else and move volumes and manipulate markets and find out shorts and things like that. It's worked for a long time. I think it's very unlikely to work in the future as we have more capital in the space and these traders and individuals become less influential. So yes, all markets are forward looking, but all markets aren't forward looking to say, like, oh, hey, the Trump presidency is coming to an end in November. Like, we're going to sell off 30% because a bunch of people have, like, this particular price level in mind. So it's going, and it's going to depend directionally on what comes after the Trump administration. Like, hey, if it's Trump moving into JD Vance or someone else, like, great. If it's Trump moving into Gavin Newsom and all of a sudden everything's going to be walked back and the US is nuked again, like, yeah, that's going to be tough. But I think the nice part is, like, once you get laws on the books, they're pretty hard to walk back. So we want to get as many laws on the books while we can this cycle.
Intern, you turned off your mic.
There's a classic touch button issue. I love that take, Tom. It reminds me a lot of how my old boss Dan at CMS thinks and speaks. It's like, oh, do you think the forward looking? And he's just like, no, it's just not how it's gonna work. He's like, prices will go up until Trump's out, and then they'll go down. Like, if you're saying anything else, just make curve. I love that take.
Yeah. Well, but that's what gets clicks, right? Like, I need to be the smartest guy in the room and have this, like, contrarian opinion or find, like, the take before everyone else does. But sometimes it's pretty simple. There was actually a great piece out in regards to, like, how venture capital investing was done today. I forget who put it out to find it, but it's like the idea of being non-consensus anymore is actually the mid-curve take, because private markets, venture capital, seed and Series A investing, and even, like, that's what I'd call most of crypto, even on the liquid markets, has so many people looking at it and has so many different, algorithms and machines trying to find, like, the next new little startup or new little idea, is that it's really not about being, like, consensus and non-consensus and saying, I found this idea that everyone else thinks is going one way and I'm going the other way, but finding the consensus idea when it's in early innings and just riding the wave and riding the trend, right? It's really just buying that hype, buying the hysteria into an idea in a market position that you think makes a lot of sense, rather than, like, going directly against the grain, because there are very few, like, dark corners anymore that are just, like, completely unfound, right? That's not the game for investing these days, unless you're going to some crazy meme coin that you can manipulate the chart or something and we'll pointy fingers, but that's basically all there is left there.
Love it.
And an interesting perspective to get from you, Tom, might be, like, what advice would you give to someone who's just getting into crypto now? assume they don't come from like an investment background or a finance background, but obviously, like last couple of years, Bitcoin up only. Crypto is looked at a lot more favorably now than it was in 2022, at least. And a lot of people seem to think that they should be like getting in on crypto, but obviously that landscape has changed a lot. Like 2017, you could basically pick out of a basket of like 20 coins, and everything went up only. 2021 was kind of the same, but now it feels a bit different. And I'm curious, like, what you would recommend, not in terms of like investing specifically, but more in terms of like approaching the crypto space for someone who's brand new.
Don't answer the phone. So I think this is probably unusual advice, but most people who want to understand an asset or an asset class or an investment or a company don't really do the work until they actually put capital behind it. So I would say start by putting a small amount of capital in Bitcoin, Ethereum, Solana, and then immediately, as soon as you have skin in the game, you're going to start to want to understand why it's going up or down a lot more. So start by putting a small amount of money in. Start by reading and understanding the use case for the major assets. So start with Bitcoin and then move into other L1s. And then as you get to the longer tail of assets, I think it 100% is dependent on your interest level and your disposable capital. Interest level to find new opportunities has to be very high, and you have to wade through a lot of shit. Um, and then you need a lot of disposable capital actually to allocate to those opportunities. So for most people, I would say 99% of people, I don't even tell them to look at other stuff besides like the major 3 or 4 assets, because it's just not worth their time. It's not where their interest level is. They're going to get frustrated when it goes down 40% and just be pissed off at, the person who recommended it, or pissed off at themselves. So if you have that like sick gene that you want to keep going down the rabbit hole, then great. I'd recommend following you guys on Twitter and reading a lot of the great research services that are out there to start to do that and building a mental model, whether it be Sorry or Delphi or others. But for most people, I wouldn't even recommend they go down the rabbit hole. And the nice thing is there's going to be products in the future that they won't need to, right? So you saw like Coinbase come out with the Coinbase 10 index, whatever. You have all these Van Eck products. As you have like more time, as these products are distributed, you'll have like, somebody say like, okay, crypto, I kind of get it, but I don't know, like, I get Bitcoin, I get Ethereum, but I don't know like the other 500 coins that are out there. Like, I just want to buy something that kind of gets me exposure to that. And there'll be like an index or a mutual fund or something like that that does that. I think that's where most people are going anyway with this stuff, which is probably a good thing, because it means like less crazy volatile price swings and less anxiety for all investors.
Yeah, for sure. I mean, this is anecdotal, but one thing that I've overheard is like, rather people who are newer to the space, rather than calling assets like crypto assets, they'll just call it like, oh, that Bitcoin, like, that other Bitcoin, which has just been kind of hilarious. But
yeah, and you see, especially with like our hot take kind of culture, like you've seen, if anyone's been subjected to TikTok, unfortunately, like you just see these like people pumping like XRP or Cardano or whatever. It could be like the next big thing. And it's like kind of get rich quick stuff. Like no one cares about like the use case or the fundamentals or whatever. And there's just going to be always a market for that, unfortunately. So, you just gotta, if you're a serious investor, you just kind of filter that stuff out. But there's always going to be people who don't really care about that stuff, and they just want to see things pump, and they don't care what the reason is. And actually, some of them have been right recently, so that's not always a bad thing either, though.
Imagine that. Yeah.
That's right.
I don't know if Danny, are we doing questions from the audience?
Yeah, we can mix in some questions from the audience. The audience will be disappointed to realize that we are remote today, so we don't actually have a wheel to spin for prizes. We'll have to make it up next week. But if we have any good questions from the audience that we want to throw Tom's way before we run up on time here, let's do it.
While you guys are looking, I did see, I want intern sports card, because I and he didn't pay me to say this, but I saw him drive a golf ball in a simulator 320 yards at East Denver at the Monad Happy Hour. It was the craziest thing I've ever seen.
I would love to play golf if this was an invite to go hit the course at some point in the near future. That sounds like a blast. We can make cards. We can do Monad cards, golfing cards. Get the Danny
Tiger Woods
Pipeline
cards sell pretty
card.
good. Yep.
Wait, do they actually? I have a ton of Tiger Woods cards. I like randomly when I was 7 got like 50 different versions of 50 different Tiger Woods cards as a kid.
2005. That's could be good.
They're very the Tiger ones are actually really pricey. There was a photo that they used for one of his cards, and the photo sold for like $500,000. It wasn't even the card. So,
oh my god,
check those out. I want to check those out.
Intern, you might be surprisingly very wealthy off golf carts. That would be awesome. I hope it's true.
This will be my last Pipeline episode. It has been a blast, everybody. I'm going to go play golf in Cabo. I'll catch you in a couple of years.
We'll see. We'll see. All right. This has been a ton of fun. Tom, really appreciate you coming on. We'll have to run this back soon. We're going to cut to a quick break, and then we will be back with Austin Federa. So if you're watching, stick around. Tom, thanks again for joining us. Really appreciate it.
No problem, guys. Thanks for having me.
I appreciate it, Tom.
5 more times right now. I'm going to sit here till you get tired and your mind is like.
Kareem comes up and he's got a look in his eyes. You know, okay, we're gonna get it now.
Is this the final tagline? We've been changing this every day.
It's like 5:45 a.m. in the morning. Rise and grind, man. Immediately get out of bed and like worry about being tired after.
Do this again without looking at the phone. See, it will be way more confident, okay? He knows exactly what he has to say. If he's thinking too much, then he just fumbles. I would say that these 2 weeks is one of my best weeks in my life.
I think if we weren't here, we would have been just lost our position, and now it's just put that foot down to just go.
Much better?
Much better.
Was it wrong? Have lunch. We'll do it 10 times again.
Bingo. Love the video intermissions. First and foremost, shout out Jessup, who's holding it down behind the scenes on the production side. Also, shout out Savant. If you've watched Monad in the Morning or any Pipeline content, you've likely seen him and his work. Savant is out in Malaysia with several members of the Monad Foundation team, including Perrine, who was just featured in that video, working with a bunch of early stage startup teams building on Monad at the Monad Founder Residency Growth Workshop at the Network School. So a lot of cool content upcoming from the Founder Residency. Really excited to see the progress that these teams are making throughout a really accelerated growth workshop. 2 weeks, heads down, grinding. Honestly, FOMOing a bit. It looks like a ton of fun, but also a lot of hard work at the same time.
All right, so we got Austin in the green room.
Beautiful. Let's bring him up without.
Was that supposed to be the break? Austin.
That was the intermission.
That was the break, guys.
Tom was Austin is being introduced as Tom Dunleavy right now.
Hello, I'm the head of ventures at a VC firm. Kevin, happy birthday.
Oh, thank you. It was not my intention for everyone to realize this, but I appreciate it anyways. Thank you, Austin.
I don't know how you didn't think that was going to happen.
Your tweet was very cryptic.
I just was making an observation And the birthday thing was on my mind, obviously. So, but awesome, Austin. How are you doing today? How's your morning been?
Things are going well. This is my second podcast of the day, so that's always a good sign. But yeah, we are about a month out from mainnet launch, so things are pretty busy at the moment.
Can only imagine. In a relatively similar boat on our side as well, but I think the logical place to start is kind of a high level rundown on 00. Explain it like I'm 5 edition.
Sure.
Yeah, and as Austin, as just quickly, as someone who has been a few months away from mainnet launch for about 3 years now, feel free to talk it up. That is the purpose of this this period of time before launch.
I was
We
going to
would love to
say,
hear the best parts
when you
of
guys said you
00.
can only imagine what it's like to be a month out from mainnet, I was like, yeah, I that checks out. So yeah, 00 is at its core a high performance global fiber network built for distributed systems like blockchain. And really, what we're building is this new communications network that is faster than what the public internet can offer. The public internet's obviously a great resource. We all use it day in and day out. It is what made blockchain possible, but there's some pretty severe performance limitations when you're dealing with high performance systems. And so, in the traditional space, high performance systems, whether it is and distributed systems, whether we're talking Google or Amazon or trading firms, Jump, Citadel, DRW, all these names, they don't really use the public internet for most of what they do. And that may seem surprising because we think of Google and Facebook as large public internet companies, but most of the data that they actually send flows over private networks until it gets to like that last mile delivery where it's going to Verizon or AT&T or something to actually get you to your house. Blockchain systems today are still really limited by the performance of the public internet. And this was fine back when, Bitcoin launched and Ethereum has 20 things per second and 30-second block times. And, even Solana's gotten pretty far with 400 millisecond block times and 1,000 validators and 6,000, nodes all over the world. But we've gotten to a point where like the software is being held back by the performance of the internet. And so if we really want to move into this area where we're competing and integrating with TradFi and trying to move price discovery off of centralized exchanges and onto actual on-chain systems, we need to rethink the base layer and get more capacity and more performance out of that base layer so we're able to actually unblock software developers and let them build new types of architectures and new high performance systems that they've kind of never imagined before. And that really is the mission and purpose of the 00 network. It's not a new L1, it's not an L2. It is this underlay physical infrastructure network powered by blockchain.
So this sounds like the work you're doing is very mysterious and important. It sounds like honestly it will be the backbone of like any very high performance system in crypto moving forward, right? It was kind of this missing piece of fundamental infrastructure. This is crypto, right? You have a mainnet launch coming up. We'll ask some questions, basically teeing up what I would imagine the audience wants to know about. Is there a token associated with this? Can you even answer that question? If so, what types of things would that be used for? Like, how do we take extremely fast internet and hardware and bridge the gap into kind of the economic structures that most crypto participants are used to?
Yeah, so high performance networks are nothing new. As mentioned, most large companies run a form of a high performance network or at least a private fiber network nowadays. The difference is those are all run by centralized companies and they work on systems that are entirely built on trust. They're not built on trustlessness and verifiability. And so what we've done with 00 is build, an orchestration and management layer that allows independent contributions of independent fiber. And so we have 10 contributors to start, which are all contributing different fiber pathways and lines all around the world, ranging from 10 gigabits per second up to 100 gigabits per second. And, for context, like most Solana validators have between 1 and 5 gigabits of connectivity at the moment. So we're talking anywhere between 20 to 100 times the performance in terms of capacity, plus much lower latency. And so this ability to have multiple independent contributors means you get the same type of checks and balances you expect from a compute network, where you can trust a blockchain because there's multiple independent parties that are all building and verifying the blocks. This is kind of connectivity's version of this. And so this is a token incentivized network. We do have a token for the 00 network, and that token really allows for payments and coordination among all of the contributors. And so we have a model that's a bit different from a proof of stake system, and it's more inspired by proof of work. So the model is called proof of utility, and you can find a blog about this on our website. You can use, if you throw it into Google, it'll come up too. But proof of utility is basically a system where we reward contributors proportional to the value their contribution brings to the network, which sounds obvious, but it's not actually how crypto works today. If you are a monad validator with 1% of the token supply staked to you, or you're a monad validator with 1/10 of the token supply staked to you, you're basically running the same hardware and you're doing the same amount of work. But one of those entities is rewarded at 10 times the reward rate because they have more tokens attached to them. Now, for a network where you're talking about proof of stake and persistent security, there's a lot of arguments about economic security, many of which I don't entirely buy, but that justify this type of reward distribution model. This is how Ethereum works, Solana works, everything basically except Bitcoin works this way. Bitcoin is different. If you are contributing 10% of the hash power, you will get, averaged out over enough time, 10% of the rewards. And so we kind of went back to that model here, where we want competition between network providers to say, if my link provides a benefit over the public internet speed, I should be rewarded for that. And I should be rewarded irrespective of how many tokens I have, because the utility of that link is momentary. Like when you're dealing with proof of stake systems, they're securing in perpetuity, but we're actually kind of a stateless network. There's no tokens that operate on the 00 network directly. That's all about, data movement on other chains. And so from that perspective, what matters is how much more performant a piece of fiber is in the 00 network than the public internet. And that's really kind of the whole proposition behind this. We want a contributor to say, wow, I'm getting so many rewards today, but now tomorrow, maybe not. What happened? Oh, someone came in and contributed a faster fiber line than mine. Well, okay, now I got to go figure out how to optimize my system so I can get those rewards back. And we're kind of just, the classic like blockchain 101 is weaponize greed to produce positive sum outcomes. And we've really leaned into that.
Interesting. So my kind of left curve summary and also question, hopefully in a way that a lot of our listeners can understand here, is through this lens of the blockchain trilemma, which I think anyone who's been in crypto more than a month has at least heard of. And
Sure.
for as long as blockchain's been around, essentially you have this idea that scalability and decentralization are somewhat at odds. And with 00 is the thesis essentially that, at least as it relates to blockchain, if the underlying internet infrastructure is much more performant, then it's much easier to build a performant decentralized system on top of that can actually scale.
Yeah, so the problem with the trilemma has always been it's like cookie cutter philosophy, right? It's like a Twitter version of Nietzsche. Like it's not actually something that has enough internally consistent logic for you to be able to explain it and look at it. So we talk about a bunch about decentralization. Okay, well, what does decentralization mean? Now, someone could say decentralization means you can run a node on your home internet connection in your basement for, let's call it $2,000 of hardware and a moderately speed internet connection. And I think that's kind of what Monad's targeting as its node requirements nowadays. How many internet providers can each of you get at your house?
2 or 3.
Okay, that's pretty good for the United States. Most people have
Yeah, I
one.
have no idea.
Yeah, so most people have one, and maybe now they have 2 because they can get wireless service from T-Mobile or Verizon or something like that. In Europe, all of the fiber lines are pretty much owned by the government, and they're subleased out to ISPs. In all of these models, you have 1 or 2 companies that can completely choke off your access to any blockchain at basically any time. And so when we think about this, like, I think the Bitcoiners are right. Like, you've got to be able to have if you truly want pure government censorship resistance, you need to be able to broadcast verification from an FM radio on a satellite and verify blocks offline, or you kind of need to accept that we live in a society and just take with it those assumptions. And so I think a lot of the focus on like node count decentralization, or can I run this thing at home, doesn't really include the idea of like the Great Firewall of China is pretty good at deep packet inspection. If there actually is an order from all OECD countries to block all the Ethereum network or Solana network or something like that, it's going to be successful. And so when we think about like decentralization, what we're really talking is about enough appropriate counterparties with enough different interests involved in a project that they have incentives that are not perfectly aligned. So the problem becomes when everyone who's providing services to a network wants the exact same thing and has obligations to the same thing. So for example, if all of our fiber network were provided by VCs, that would not be great. If all of our fiber network were provided by trading firms, that would not be great. If it was all exchanges, if it were all, you want a diversity of interests, the same way that the reason the US government and political system functions, and we can debate how well it functions, but it functions better than any other democracy in the world by a wide margin, especially for how diverse of a government it is that you have many people from many independent perspectives that are all providing checks and balances on one another. And I think that's truly what we mean by decentralization. The power of Ethereum decentralization is not that you can run a shoebox with something that we can call a validator, even though it's not a validator. It comes from having multiple independent software packages and clients and lots of multi-party interest and support in the network. And that's kind of the thing that, like to bring this all back to 00, like when we look at this, what we're saying is we need enough contributors that we can be as credibly neutral as the public internet. Now, there's only 20 companies that run the entire public internet. There's only 20 tier 1 ISPs. And so with 10 contributors at our mainnet beta launch, we're halfway there, is what I would say. And that's kind of over the long term, our goal.
Yeah, and I think to really start to understand 00, I think it's also important to kind of understand that like decentralization is key in crypto, right? It's one of the foundational pillars of why crypto exists. But like functionally, it is actually a means to an end.
Yes.
And the end is equal access and censorship resistance, right? Those are kind of the two key things that decentralization affords. And it's kind of the accepted and most viable path that we currently know, but it is not the only one. And so I think it's fair to say like 00 is basically looking to provide the same end result, while also working within like the realities of who can actually contribute to a system like this. So it's like maintaining the crypto ethos and also like bringing the product that, the end users actually want to market.
Yeah, another key component of this is 00. Again, it's a stateless network. It's not an L2, it's not an L1. There's not users deploying DeFi swap contracts on it. There's something like, the Monad Layer 1 that maybe is running on 00 someday, and there's applications built on top of that. But what that means is if 00 goes offline, is censored by governments, whatever, there's still a fallback option to the public internet. Now, you may have to scale down from 500,000 transactions per second to 5,000 transactions per second, but that's a pretty good failure mode for a system like this. And so the idea is it's not all or nothing. It's not like you can only use 00 or you can only use the public internet. These systems can coexist together. And that's kind of one of the main unlocks that we have for this is you can think of it as almost like a safe mode failure, where if something happens, there's an extreme event, there's World War III kicks off and suddenly all the fiber lines get cut that 00 is operating on, you can still fall back to the public internet and protocols can dynamically scale down to meet the limitations of whatever system they're running on. Very similar to how Bitcoin's algorithm for hash power automatically adjusts over time to the amount of hash power that's available in that system. And so I think that's kind of one of the things people sometimes are confused about, where because we're not building a layer 1 or a layer 2 where that has to secure, billions of dollars of USDC or some other digital asset, we can operate in a fundamentally different way.
I'm curious what this ultimately might look like or feel like for the end user. I guess the first part of that question is like, is there ever a conscious decision on the user side to use 00 or to use public internet infrastructure? And then the second part is like, what ultimately is the difference in experience?
Yeah, so we're probably a level or two lower or higher. No one can agree on which direction the stack goes from the user. So your RPC provider and your validator are the folks who would be using 00. Maybe your indexer, your wallet may be talking to it. But as an individual user, you're not picking, where your transactions get sent or what data processing layer it's done on any more than you pick what RPC you use today. In terms of the experience, it really is all about like fairness and open access. So if you look at something like Turbine on Solana or RaptorCast on Monad, these are systems that are trying to solve a core fundamental problem to any distributed system. How do you get data that's created in one point of the network out to all other nodes in the network as quickly and fairly as possible? The problem with the public internet is it only supports something called unicast traffic. And that's basically one-to-one. That is, if I have a bunch of data and I have to hand it out to 100 validators, I'm sending one copy to each validator. And now there's a bunch of tricks that are used, like Turbine and RaptorCast both use this trick of you build a tree. And so I send it to some people, those people all send it to other people. And within 3 or 4 hops, you've got all that data propagated around the world. It's great in theory. It works. It looks awesome in a white paper. It's worked well for Solana for, the entire history of Solana, but you run into some pretty fundamental limitations pretty quickly. The first is every additional node added to the system is effectively a bandwidth tax on the entire system because that node now needs to receive data. The other thing is Turbine and I believe RaptorCast are both stake weighted. So if you have more stake, you're actually getting a fresher look at the data coming off the network than someone who has lower stake. This means if you're a trading firm like Galaxy and you have, large amounts of stake, you have a structural advantage over a small trader, even if that small trader is running their own validator. Doesn't matter how expensive hardware you get, how big of an internet connection you get, you're limited by your stake weight. And so one of the really cool things that we can do in 00 is we can use something called multicast. And multicast is a technology you all have experienced in your daily lives. It's how AirPlay works. It's how Sonos speakers work. It's the ability for one device to broadcast data to multiple endpoints. And that's all hardware accelerated by the network. Now, this doesn't work on the public internet. The public internet does not support multicast. But this is the way that, for example, the stock exchanges all distribute pricing data. It's, there's a whole question on the stock market of like, who gets the data first? Well, with multicast, everybody gets the data at the same time who is operating in like the New York Stock Exchange data center. And so we can bring that same principle to blockchain where suddenly everyone operating on the network, if they're in, you still have to deal with the time of light delays and, all those types of things. But everyone in New York will get data from state updates at the same time. And because blocks are built everywhere around the world, you average out to an even experience for all users. And I think this is one of the real, fairness is a big thing holding blockchain back from competing with TradFi in a more cohesive and traditional way. And that's because right now, we have a lot of these systemic asymmetries built into blockchain because until now, we didn't really have any other alternative.
I just want to throw in, Danny, I'll throw it to you for a question after. A lot of the questions I'm asking are basically, I'm speaking to the audience. A lot of the questions I'm asking are teeing up Austin to say really the things that I think are very cool about 00. I know a lot about it. Austin, I did not know the stake weight side where you actually get a structural advantage. Well done. Very, very good. That was very good. I was unaware.
Yeah, it also gets even worse and messier because you can have something like 2 validators in the same data center, but they're in different parts of the Turbine tree or the RaptorCast tree. So your node may be sending data to a node in like your node in Amsterdam is sending data to a node in Singapore. That node then is sending data back to Amsterdam to talk to the lower stake weighted node. And so you can run it, and because there's no way to be geographically aware on Turbine or Raptorcast, because location pinpointing is actually a really hard problem on the public internet. And so you just don't know where these machines actually are. And so sometimes you can be a second behind the tip of the chain. You used to see this a lot with Solana, where lower staked validators, they get to build 4 blocks at a time in their leader schedule. And the first block, they would sometimes miss it, or they would simply not be able to build it particularly well because they were still waiting for data to come in from the other validators that were building blocks before them. And there's a lot of optimizations in software that have made that much better. But our kind of whole point is like, we have a ton of software fixes to solve what fundamentally should be solved at the hardware layer.
Gotcha. I want to zoom out a little bit as well. Obviously, exciting times for 00. We've got mainnet upcoming in about a month, I believe you said, Austin. But you can kind of pick the time frame here, whether you want to focus on like the next year, the next 2 years, the next 5 years, whatever I think makes the most sense. But how does this ultimately play out?
Yeah, I mean, we are building for all types of high-performance distributed systems. So that includes non-blockchain systems or other types of blockchain systems. So one example is we're already working with Shelby Storage, which is this protocol that Aptos and Jump are working on, which is kind of this new storage network that's meant to compete with like AWS S3 and Cloudflare C2. And that needs like high performance data connectivity between all the storage nodes. And so that would be the egress costs, basically the cost of bandwidth when you move in and out of a data center or a cloud provider, would make that project untenable economically. It's kind of an open secret, but the cloud providers kind of give away compute and then they charge you a huge amount for bandwidth. And that's part of how they get this like structural and systemic lock-in. And so what we're able to do is basically change the entire egress data rate model and make something like decentralized high performance storage a reality. Now, we're not building the whole technology stack. That's obviously the folks at Aptos and Jump. But on the connectivity layer, that was like a major component where without 00, the economics of a project like that would be pretty much untenable. So, you kind of like zoom out and you sort of look at this from the perspective of, we would like to see many high performance blockchains pushing 1 million transactions per second in a few years. We think there's a lot of applications for decentralized compute and storage to actually truly start competing with centralized systems. Like up until now, if you're using Arweave or you're using Walrus or you're using Filecoin or something like that, you are paying basically a premium for decentralization. And our hope is that we're moving to a place where decentralization is actually cheaper, if not on parity with any of the centralized systems. This is very similar to sort of how if you had like a Windows mobile phone pre-iPhone or a BlackBerry phone, like you were getting a not great experience for a piece of hardware, but it was like you needed it for work. There were reasons that were separate from just wanting this in your daily life that you were using something like this. That's decentralization at the moment. Stablecoin payments are just barely getting to the place where they're equally as easy to use as a wire transfer, which is crazy because the UX of a wire transfer is like pretty bad. I think we can get to a place where blockchain experiences start and like the economics really start to rival that of centralized systems. But we can't do it if we're going to run everything on the public internet because we're playing with one hand behind our back and our feet tied together.
I'm curious as well, like where the inspiration for 00 came from, and then also like what was the impetus for you, Austin, to actually go and work on it. Obviously, you had quite the tenure at Solana, weathered the ups and downs, were really a pivotal part of the ecosystem and protocol growth over there. So it was definitely surprising in a sense to see you focusing on a new new endeavor. I think it was maybe a little over a year ago now that you announced you were going to 00, maybe even less. But
Yeah.
I'm curious, where that initial inspiration came from, and then what was ultimately the impetus to go and focus on it full time.
Yeah, so we announced in December of 2024. So we're gonna, fingers crossed, get to mainnet less than a year after announcing, which I think is pretty exciting.
Congratulations, first of all, as coming from those who know that journey well.
Hey, Monad's been launching in October for 3 years, so we're ready to go.
The best month. Best
yes.
month.
So look, the real thing with this for me was like I spent 4 years at Solana Labs and Solana Foundation, which is a long time at one of these organizations. And we went through, when I joined, the token was like I think $1.25, something like that. We ran up to 250 or whatever, crashed back down to 8 after FTX. Like, and you see where things are now today. And if you'd told me back in 2020 and 2021 that the president of the United States is going to launch a meme coin on this thing, it would be like, first off, what are you talking about? Like, first off, the government hates crypto. There's no way. Also, like meme coins, like who's ever going to the industry just changes so fast. And Solana is at this point where like it's hit escape velocity. And so for me, I was kind of looking around at some of the problems we were dealing with and looking at the Firedancer project, which was a new validator client aiming for 1 million transactions per second, looking at the work that Anza has been doing, optimizing the client. And you'd sort of keep hearing this like mumbling from some of the engineers of like, okay, the validator can do 1 million transactions per second, but like, we're not going to be able to actually run it that fast. It's like, wait a minute, why? Like, why are we doing this if it's not going to work? And they're like, well, the public internet just doesn't have the data rate to support this. We're going to have to drop the node set to like 200 validators if we're really going to try and get that high. And that just, to me, felt like a choice that someone shouldn't have to make. Like if you plot on a chart, on one axis, you've got node count, and the other axis, you've got transactions per second. Solana is like out in its own league. There's really no other network that has 1,000 validators that has anywhere near the transaction count of Solana. That ratio of how distributed is your cluster relative to how performant is the cluster, that's like that metric to look for. And at least in my view. And Solana is like pushing up on the limits of what it can do. And so our hope with 00 is that we're able to support 10,000 validators all running at 1 million transactions per second. And we're able to do this across many, many different networks. And so all of the work that has to gone into optimizing the validator client to be able to perform that high, if you ran Geth locally back in like 2018, just on one machine, you couldn't really get it over 400 transactions per second. And that was like your theoretical maximum of how good the software is. That's not the case anymore. You can benchmark, individual validator clients of Aptos and Sui and Monad and, all these, and Solana and all these networks, and you get much, much, much higher numbers. And it's kind of like, why are testnet numbers never indicative of real world performance? And it's because the real world is messy and you have to deal with the public internet. It's not all just running in one GCP cluster anymore. And we're really trying to limit that drop of what of the delta between the theoretical and what is actually possible in a mainnet deployment.
Yeah, I remember there was like, I think it was at Breakpoint. There was some presentation on Firedancer and they're like, we did 1 million TPS or something.
Yeah.
And I was looking, I was like, shit, like, is this bad? Like all of a sudden, like, is Monad going to be smoked here? And I asked James and he looked at it for 3 seconds and he was like, no, don't worry about that. That's nothing. And then went back to his computer. I'm like, what are you talking about? He's like, dude, they're using like 100 gigabyte internet connection or something, 100 gigs per second. He's like, no one can run that. That's a ridiculous metric to even use. Like, I don't know why they're promoting this. It's nefarious. Went back down. And I was like, oh my God. Like, yeah, that makes a ton of sense. Like, who can even buy that? But then you got 00 coming in. So we will have very cheap, fast, and abundant block space for the indefinite future, it seems.
So that demo you're talking about last year at Breakpoint, where they were running, I think it was 6 nodes on 4 different continents, and it was all linked by 10 gigabit per second dedicated fiber.
That's what
that was running on the 00 network.
There you go.
So that actually, we hadn't announced the project yet. No one knew what 00 was, but that was the first contribution to the 00 network, was that network that tech demo was, and it was very much a tech demo. The leader schedule was not rotating. There were a whole bunch of other things where that truly was a tech demo. But what that sort of shows is it's kind of like a Nuremberg lap. That's not indicative of how your car is going to perform in traffic. But it's like, if you can get that car on a track, that Koenigsegg really can go that fast. That Bugatti can actually hit 300 kilometers an hour. And so what we're doing now is we're basically saying, okay, so we know what the theoretical software performance is of these things. We got to make sure the roads are fast enough that you can actually drive your car that quickly. And so that's kind of like the best way to think about this is everyone has been building incredible engines and vehicles, but they just haven't had an environment that they can actually show the performance of what that looks like. And that's, across the board for all sorts of high performance distributed systems. That's our goal at 00.
I'm curious, if you got something, intern, go for it. But I'm curious how this might impact the broader crypto landscape and chains that are already live today.
Yeah, I mean, we are, adoption of 00 can run in a lot of different fashions. I mean, chains that are launching have a little bit of an ease of use structural advantage initially of they can just say, hey, we're going to use 00. We're going to have multicast baked in. Solana, right? The folks at Agave and Firedancer are doing a bunch of good work to support us, but they don't have the power. It's a distributed system run by multiple independent people to say, okay, everyone just move over to 00. So there will be obviously a period of support of the pub. We're never going to drop support for the public internet, but right now we have about 15% of Solana running on our testnet. And when our mainnet launches, our hope is we get even more folks migrating over because the mainnet will be more performant than the testnet. But for new networks that are launching or for existing networks looking to adopt 00, we are base layer neutral infrastructure. We started with Solana support because it's the hardest problem. As I mentioned in that graph, it is the most transaction count to the most number of nodes. And so if we can prove that we can support that level of traffic and that level of load, I think it's a really strong signal to other blockchains in the industry, including even centralized sequencers that are interested, in coming on and using the 00 network. And that's kind of our main prove out point at the moment. We've actually had a lot of inbound from private systems and non-blockchain systems as well that are really interested in what might be possible when they're using 00 as well.
Are we able to hear what any of those use cases may be, or maybe proxies?
Sure.
Of what
yeah.
Types of things are? Because that is very interesting.
Yeah. So you kind of across the board, you sort of have this, and I don't love this analogy because it feels very 2011 for me, but really this is honestly the best way to talk about this is the cloud was as much a change in technology as it was a change in business model. So prior to the launch of the big cloud providers, if you wanted to say, I need 100 servers in this country, you got to call up a dude, you got to sign a contract, you've got to wait several weeks for them to all get installed. But with the cloud, there's kind of more on-demand provisioning. And so one of the things that we're going to be able to bring is this network that's able to just onboard people very quickly, where they can pay for access to move data across it. And suddenly they have access to some amount of bandwidth on high performance global fiber that's lower latency than the public internet can provide. And so you could see all sorts of different use cases for that. One of the groups we've been talking to, they do distributed training for AI inference and distributed training and AI inference. And they're sort of your sort of number two customer for a lot of these big AI data centers, where they may have, a workload from, a certain company, but when that workload finishes, they're just okay, we'll go, turn our data center over for use on this blockchain protocol, because we'll earn some money from it. And, they're not paying us as much as the primary job, but they're still paying us a good amount. One of the major things for that is they have to download the snapshot. They've got to go fetch all the data of how the models evolved since they were running last time. That can be a half hour of downloading data. If that goes down to 15 minutes or 5 minutes, that's a meaningful amount of additional compute that you get through into some of those models and workflows. So there's all sorts of applications like that. Microsoft has basically a monopoly on multiplayer server infrastructure for games. Like even the PlayStation Network runs on Microsoft Azure. I'm really interested to see someone try and build a distributed multiplayer matching engine, not even a crypto project at all, just something that can be run on high performance fiber all around the world. We talked about the storage use cases and the CDN use cases already. You can kind of think about this as like, if we can sort of rebuild the decentralized AWS stack, or we can part out some of that stack, that just will create more innovation. And I honestly don't know what people will build on top of 00. The same way I don't think anyone knew in 2019 what people would build on top of Solana, or, people in 2020 thinking like, oh, if we had parallel EVM that could do 100,000 transactions per second, what would we even build? The tooling and the ability usually precedes the entrepreneurship and the innovation by a few years. And so our whole thesis, and this is really the thesis I had at Solana Foundation as well, is like build as low level as possible, as generic as possible, and as performant as possible. And smarter people than us will come up with ideas about how to use that.
It's pretty funny. An analogy that I often use to explain things that will likely be built on Mana in the future is talking about how the internet got a lot faster from like 1998 to like 2010. I'm like, yeah, well, the internet was really slow, so you had like emails and web pages, and that was kind of it. And then they sped up the internet like a couple orders of magnitude, and all of a sudden now YouTube is possible. And it's like everything that you think of when you think of the internet today is only possible because the internet average speed got much faster. And so it's like speed up the internet, and then you can do all this cool stuff with it. I use that analogy. Sorry, yeah, I use that analogy to describe Mana because I'm like, yeah, well, if you 1000x the amount of transactions you can do per second, like you're going to build things that are, just like people haven't even thought of yet, but will be very important in the future. But then if you extend that analogy like 00, you're like, nope, we're actually just going to do it again to the internet. We're actually just going to make the internet that much faster. So it's funny to think about. Like we compare it to the internet speed up, but this is literally just the internet speed up in and of itself. It's awesome.
Thanks. Yeah. I mean, people kind of forget that the first iPhone was a little bit of a flop because it only had 2G. Didn't have an app store as well, but like there was a lot, the minute you get like 3G coming into smartphones, that's when they changed taxis forever. That's when they changed dating forever. That's when they changed media consumption forever. Like all of these, like the form factor existed, right? We had Blackberries and Palm Pilots and Windows Mobile and even the iPhone for a while before the connectivity was fast enough that it, like, if you're someone who like works on Wall Street for a living or works for a big bank or runs a company, you're going to be fine pulling out a device and waiting 1 minute for it to download new email because you're in the Hamptons and you're on the beach. And like, this actually lets you like live your life while still doing a little bit of work. For a consumer, that's just like a completely uncompelling pitch. But suddenly it's like, oh, I can watch TV anywhere. I can send photos to people really quickly. Like I can get a ride from a car. I can find someone to date. Like these are all experiences that are much better when they're not tethered to a desktop. So we'll see where things go.
One thing we love to do on the Monad in the Morning live stream is take some questions from the audience. I've noted down a couple here from the Monad community, and first from Diego Voss. How does the pricing model for 00 compare to traditional ISPs, if that's even a relevant comparison?
Yeah, it is. So, traditional ISPs basically charge you on egress data. And this is why high performance networks are very hard to run profitably in the cloud. The more data you generate, the more your egress costs are. Double Zero works on a percentage of earning model. So validators pay a percentage of block rewards or, MEV or something like that, depending on the network, to operate on the network. And our promise here is like, yes, we're going to take, a 5% take rate from you, but you're going to make more than 5% more because the whole system's moving faster. If you quadruple the available block space, your base fees are going to go up. If, Double Zero is able to offer like, maybe this is kind of the trader experience is worth going through here. So if you are running like a centralized trading operation, like your jump trading or something like that, and your execution time from an order sent to that hitting the market is like 64.5 milliseconds, and where the market's going to be in 70 milliseconds, you're going to make that trade every time. If you have to deal with public internet latency variance and maybe it's 65 milliseconds, maybe it's 85 milliseconds, maybe it's 120, maybe the packet gets dropped and never actually gets there, you have to suddenly build in a lot more sort of careful logic into your trading systems. And that's where things are today in blockchain. If I'm, Wintermute and I'm trading and I'm sending a transaction, it has to race to wherever the leader is. And I don't actually know how long it's going to take to get there. This is why like market making in crypto is a riskier activity because there's no cancel prioritization. You can get picked off more easily. Even if there is cancel prioritization, you don't know how long it takes you to get that cancel in. And so this is all of the type of stuff that we are looking to solve with Double Zero. And we think it can actually increase the profitability, make spreads tighter, all these types of other benefits to the network.
Love it.
I know there's one other community question, Danny. I don't know if you have a list of community questions or if you're pulling them live. Jessup sent in a community question from earlier that we can hit. So this is from, I never know how to pronounce these, dude. We actually, Austin, fun fact for you. We constantly mispronounce the names of people who ask questions. And then there's a new meta where if you get mispronounced, you change your actual name to fit the pronunciation that was given on stream.
There's no way you can't pronounce this one.
Okay. Platt on BBT. Pretty good. Platt on BBT asks, question for Austin. If you could ask the Monad team one question about their vision for the future, what would it be? And why do you think that question would be important? And I think Platon is pulling on your experience working at the Solana Foundation for so long, having a lot of experience on that one side and that now also running your own project.
Yeah, it's actually hilarious to me though that sorry to interrupt you, Austin, but it's like, okay, we'll take a question from the audience and then it's just another question.
Tell us about Monad. Yes.
No. Yeah.
That's good.
So you asked a question.
Yeah. So my disclaimer here is like I am an investor. I've known Keone for a number of years at this point. And so, just so everyone's aware of that. Look, my question is always around decentralization theater versus decentralization like metrics that truly matter. And so my challenge to the Monad team would be like, are you mid-curving the validator requirements? Is a $2,000 node with 50 megabits or 100 megabits of symmetrical connection actually any less accessible or more accessible than a $5,000 server running with a gigabit symmetric connection? That a lot of the times there are these things that they feel like they're access oriented. They feel like they're actually increasing decentralization. But at the end of the day, like if you can afford a $2,000 computer with, 100 megabits of symmetric internet for 5% more, you reduce your access rate by 2% and you can quadruple the validator requirements, and that helps Monad compete more. Those are always the type of questions I ask teams whenever they're talking about like decentralization trade-offs and node requirements and those sorts of things. Because as long as the monetization is there, people are gonna, as long as the network is valuable and there's real activity on it, no one's like, oh, I would validate for this network, but it requires too much, OpEx or CapEx to start. It's usually about a lack of connectivity into their specific region or geography anyway.
Yeah, I think that's an awesome question. I'm trying to like put myself in Keone's shoes and frame my answer in that. So this is my best rendition of me putting my hand in the puppet mouth and pretending to be Keone. I would say that like on the example that you gave where it's 2% needs to drop out and then you quadruple, there it might be 2% of the active set, but a lot of the importance of low hardware requirements is actually in the opportunity to do it if you wanted to. So it's not in actually doing it all the time. It's in the potential if you wanted to jump in for some reason that you could. And so I think it's a really good question. There are some enormous trade-offs, right? Like as you point out, you could have pretty much the same group of validators and way more performance. And that is a conscious decision. I would say that it is certainly the starting point for where Monad is in that trade-off. I would be surprised if it is the ultimate endpoint and that never changes. I think there's a lot of conversation around, if it should change, which direction to go in and what that looks like in the future. So I think framing it as like this is the initial place that Monad will go to mainnet at, and then over time that could shift is the most accurate way to think about it.
Yeah, this has been kind of my persistent question for the Ethereum community is how are you defining metrics of access that you want to target? Because Ethereum hasn't really bumped node requirements up since it launched. I mean, apart from the proof of work versus proof of stake transition, but you kind of look at that system and you say, well, like if we were just optimizing for like if it was $100 worth of hardware, well, you can get 100 times more hardware for $100 than you could in 2015 or even 2020. Like the Raspberry Pi lines grow pretty quickly. Connectivity globally is also increasing, maybe not quite as fast, but like what are the objective measurements where you're saying this is our access threshold? Or is your access threshold just the node requirements will always stay the same and we want more people to be able to access it? And then, in 30 years, the requirements bump up slightly. It's always been for me like very important to articulate the vision and the level setting for what matters. And I think that's something that Monad has an opportunity to do, as you're talking about, to sort of say, hey, look, like we want to make sure 10% of the world's population could run a node, just to throw a number out there. Maybe it's 30%, but if it's 70%, well, suddenly like there's no network in the world that 70% of the world's population can run. Just because of the global poverty rate means a Raspberry Pi is out of reach for a significant portion of the world's population. So like, where is that threshold? What metrics are you using to determine what the nodes, should target? And, it's obviously an evolving conversation over 10 or 15 years for a protocol. But I think being upfront with that stuff benefits kind of everyone. Our goal is like, we have no plans to ever allow residential internet connections to be contributed to the 00 network. It's just not going to add value to the network. And our whole thing is like, we are trying to push the bounds of what's possible and run at kind of as fast fiber and as fast connectivity as we can economically support, because we think that'll push this entire industry forward further. That's not saying anything in L1 or L2 should do itself, but like performance is like our ultimate North Star.
Yeah, I got this like funny picture in my head when you were saying that, of like if you were to create the target percent of world population that could participate in the network, it's very similar to like the inflation index that like the Fed uses to regulate. And I'm like, all right, if we actually established a target, like the Fed has 2%, right? They have a couple other factors they look at. Then we could actually have a Fed, quote unquote, a separate entity that acts in a similar way that the Fed acts, that says, okay, well, this is this is kind of the wealth distribution. This is the access to hardware. This is what hardware currently goes for. And so we set the rate at blank. It would make for some funny meetings. Danny, this would be Monad's FOMC moment. We would meet once per quarter. We would dress in suits, discuss
Hold up a
decentralization.
groundhog and see
Yes.
which way the economy's going. Yeah.
Right. We'd have the buy Bitcoin side in it.
Exactly. So the nice thing about this, though, is you'd have, like, if this existed in 2020 and 2021, node requirements would have dropped and networks would have gotten slower because there was such an insane supply chain shortage that, like, you literally, like, you could not buy the hardware needed to run a Solana validator for probably 9 months in 2020. Like, it was just all being taken up by the big cloud providers. And so even if you had the money and placed the orders for the hardware, you'd just get rugged. You get an email saying, hey, sorry, Facebook bought 10,000 servers. We're repurposing your order, like, go pound sand. And so it doesn't always have to be about increasing node counts. Who knows? Maybe like China invades Taiwan and suddenly we drop node count, or we drop node requirements, and we actually say, hey, a bunch of old stuff, we need to be able to reactivate this because 70% of the world's fab capacity is offline. And we need to be able to make sure that the network can keep growing. So we're actually going to go from 5,000 TPS back to 4,000 TPS because we want some of this older hardware to be viable on the networks. Like, this isn't all just a one-way direction, but I think it's important to think about these things in a dynamic way.
It's a fantastic point. Danny, would you be on the council for monitoring the Chinese Taiwan conflict?
Oh yes,
you'd at least be a spokesperson
with deeper experience.
Actually, once per week we meet on Monad in the morning on Throughput Thursday and discuss the throughput that will be given each week.
You're kind of a chip expert,
Perfect.
Sour cream and onion, vinegar, kettle.
Oh yeah.
Well,
French onion.
This is.
Sorry, Danny. Go. Floor's yours.
No worries. I was just gonna pivot away from French onion dip and thank Austin for coming on today. And as a final remark, we often do final alpha on the Pipeline podcast or Monad in the Morning, which is shamelessly ripped from Kobe's Up Only. Kobe and Ledger, of course, greatest crypto podcast of all time. However, I would love to put a slight spin on Final Alpha for today and actually solicit any advice that Austin may have for Kevin and myself and the team and community here behind Med Foundation, especially as we push towards mainnet. Obviously, as someone who saw Solana in the very early days, weathered the ups and downs and everything that was thrown at you over the past couple of years. If you have any tidbits of advice for us or for the community as well, would greatly appreciate it.
Yeah, sure. I mean, I would say I think overall the project is doing, for an unlaunched network, doing very well. The vibes seem to be good. It seems like there's actually a lot of builders that are engaging with it. I would say, and this is kind of like tricky because Solana's marketing was almost entirely performance and technical up until like 2024. And yes, there were conferences and there were these other things, but like it really was about like what are the technicals and what are the fundamentals. And we're kind of in an area where I think there's more maybe retail, we're in a little bit of an upcycle, and it's harder to talk about that stuff. But at the end of the day, like the most important thing you can do is to make sure that the average Monad fan knows enough about the project to be able to explain why the technology is differentiated from a competitor. And I think Solana did an incredibly good job that the average person building on it and the average holder of the token, they obviously didn't know exactly how the whole thing worked, but they had these ideas in their head about that were accurate, right? Like Haseeb talks about this all the time, that you have metaphors and analogies for what a system is and kind of what are the core principles, and they have to work like through the entire chart distribution of IQ. And that would be sort of the thing I would say is I don't see a lot of people with a technical understanding of why Monad is a good architecture or superior, or like a thesis on why it's going to win out. As much as I do seeing them very excited about the community and very excited about, all the fun stuff and all the good stuff that's getting built. But like there will be another bear market at some point, and it's the understanding of the technical fundamentals that allow you to weather that storm, keep the community loyal, and understand that like, hey, there is a long-term thesis here, and this is the bet on that thesis. Like for Solana, it was totally at a time where the rest of the world thought sharding was the only one true God, saying like, I don't think sharding is a good idea. I think you want competitive markets in one global state machine. And that idea, like, that's what carried Solana through like the collapse of FTX and going down to $8 and like a bunch of projects like being like, oh man, do we need to build somewhere else? And then kind of looking around and being like, there's nowhere with anywhere near the performance or market characteristics of Solana. And so like this is home. This is where I'm building my thing. And like I think there's very few projects that would have survived an FTX level event. And you should always have in the back of your head that like that could happen to my project by no fault of our own.
Yeah, it's definitely a great point and a great reminder. And yeah, it's important to keep banging that drum and letting everyone know what the ultimate vision is, why we're here, and what differentiates Monad and what it is, poised to accomplish, not in the next 3 months or 6 months even, but well beyond that for years to come.
Yeah,
we released. We released a video that Danny, Jessup, and myself basically put together. I tweeted like 2 weeks ago, but it's Monad explained like your 5 in 5 minutes. I think we just need the whole series, Danny. Explain like your 6 in 6 minutes. Explain like your 20 in 20 minutes, and we'll just go through the entire stack until everyone understands it. For every single age group, BF Hasib's entire curve maps perfectly onto everyone that is looking at Monad Tech. We just keep going there.
Yeah, in retrospect, if that video was explain it like I'm 5, then we were explaining it to the smartest 5-year-old in the world potentially. But definitely more shots on net explaining Monad to come in the next few weeks and months. We've got many things in the pipeline, trademark, no pun intended. But we are at time on this beautiful Throughput Thursday. Austin, really appreciate the time, really appreciate the insight. Really excited for 00. If you are following along, you must go follow Austin and 00. And thanks again. Appreciate the time.
Thanks for having me on. Appreciate it.
Thank you, Austin.
One other final call out for our loyal Monad community members watching the stream today and always. Because we are remote, we don't have the wheel with us this week. I know that is very disappointing, and we do send our heartfelt apologies. However, we have noted down everyone that we owe a spin to from previous weeks, as well as those questions that we asked live on the air today. Special shout out for Monkey Luffy, who I know is owed a spin. We will get to you as soon as possible, sir. Tune in next week, 10 a.m. Throughput Thursday. This is Monad in the Morning. Thank you for being with us.
Peace.